Good day, and welcome to your daily global economy update. Here are the top economic and market stories making headlines around the world. Today, gold futures spiked to an all-time high of $3,534 per ounce, driven by fears that the U.S. might slap tariffs on certain imported gold bars, especially the Swiss-made 1 kilogram and 100-ounce varieties. That surge didn't last long. Prices pulled back after the White House assured markets that an executive order clarifying the matter is on the way. Still, the incident brings to reality that even safe haven assets can become hotbeds of volatility when policy uncertainty hits. For the global gold trade, it was a reminder of how fragile supply chains can be when geopolitics steps in. In the UK, the Bank of England's chief economist, Hugh Pill, struck a measured but cautionary tone. While acknowledging that inflation has cooled from its recent highs, he warned that stubborn behavioral pressures, like entrenched wage growth and pricing habits, could slow the path toward further interest rate cuts. His comments came just a day after the BoE delivered a narrowly approved rate reduction to 4%, in a rare split vote that revealed deep divisions within the bank's leadership. For households and businesses, this means borrowing costs may edge down, but not as quickly as many had hoped. Markets are already tempering expectations, pushing forecasts for the next rate cut into early 2026. Meanwhile, tensions over global energy flows are intensifying. China has pushed back against growing U.S. pressure to curb oil imports from Russia, calling its energy cooperation with Moscow legitimate and lawful and rooted in national interests. This defiance comes as Washington mulls secondary sanctions on entities facilitating Russian oil trade. The stance from Beijing not only highlights the limits of U.S. influence, but also signals that global oil trade routes are increasingly being shaped less by market forces and more by political calculations, something that could inject fresh uncertainty into energy prices worldwide. Now, let's take a quick look at other major headlines from today. Global investors withdrew $7.8 billion from equity funds, shifting to money market instruments amid rising policy risks. Oil prices ended mostly flat, but still logged weekly losses despite talk of potential U.S. Russia diplomatic moves. The U.S. dollar softened as markets priced in possible Fed rate cuts later this year. Colombia's economy expanded 2.6% in Q2, easing fears of sharp slowdown, though inflation remains a concern. That's all for today's Global Economic Roundup. For your daily dose of global economic and finance news, please subscribe, like, share, and comment. See you tomorrow.